Hello, this is Brian Resney, President of Resney Wealth Management. I'm bringing you an important update about the economy and the investment market so you can better position your portfolio. I hope you've been listening to our update videos every week and listening to our radio show on Sunday from 10 to noon as we continue to talk about topics that really concern retirees and pre-retirees alike. I think we're continuing to see a weak U.S. economy, as I've talked for well over a year and a half that this recovery is going to be weak at best. We're seeing the stock market roll over slightly from that. Obviously, we're not that far from some of the highs we saw just a month ago. But what this basically tells me and should tell you, the investor, is appropriate change when change is due, and that's our slogan for our company. And making a portfolio adjustment, or making portfolio adjustments, I should say, is going to be more important than ever. Active money management and active risk management within that portfolio is going to be extremely important. Buy and hold, set it and forget it, is not, unfortunately, going to work in this type of an environment. And I think we are headed for years and years of markets that basically ratchet up 3 steps, ratchet down a step or 2, ratchet back up 3 or 4 steps, ratchet back down. So unfortunately, if you are just buying and holding with little or no research, I think it's really going to hurt not only your returns, but give you excessive risk within that portfolio. So you do need to shake it up occasionally, and those changes will need to be made. Now, one of the things that we are looking, and I talked about this on Sunday's show, is I was looking for further deterioration on yesterday, which was Monday, and we're looking at a tad bit of a bounce. We are actually looking to reposition some assets within our client managed accounts into some risk assets. We are looking to actually add to our position in gold. And I believe what you're going to basically find is QE2 is going to be over in the next couple weeks. I think the Fed will basically keep rolling over those interest payments back into to the money supply, essentially, in order to keep those rates low. And I think today, more than important than ever, investors really need to realize that if you do own bonds at all, anything more than a 5-year maturity has substantial risk out there, whether it's bonds or bond funds or ETFs. We actually have really pared down our risk in any long-term bond at all, and I talked about this on our show. And I think investors really have sometimes become complacent or really don't understand what's in that portfolio that they do own. It really is important that you understand what you own and what you should be selling, especially when you have rates that have basically ratcheted back down. This gives you another chance, if you haven't sold some of your longer term or intermediate term bond positions, to do so and essentially hopefully take profits if you bought those at the right time. But the most important thing is really at this point in bonds is really reducing the risk exposure you do have. Now, I'm not looking for any great recovery in the U.S., any big GDP growth of 4 or 5% as the government kind of alluded to at the beginning of the year. I am looking for GDP growth probably between 1.5% and 2% throughout this year, which is very, very anemic and really will not help grow the job numbers. And I think we're going to continue to have high unemployment in this country. And this essentially could be the new norm until we really pay down a lot of the debt and the deficit that's been accumulated, not only by the government, of course, but also by a lot of individuals within this country. I continue to like the emerging markets substantially. In fact, I talked about that and wrote about that in my newsletter. 5.4 billion people are in the emerging market economies. We are looking for explosive growth. We're looking to add to China again. We do own a position in China, but we're actually looking to add more to that in the upcoming days. So I think as more and more key points come out and really where the economy is not only here but overseas, we continue to make fine-tuning adjustments to our portfolio with a very strict eye on risk management. And I think it is extremely important, again, to make sure you have an investment strategy, that investment strategy is in writing, and that obviously would entail all the different aspects of your portfolio. When do you buy? When do you sell? How do you reduce risk? How do you value the investments within the portfolio? Unfortunately, most investors do not have an investment strategy at all, and I would say that's better than 9 out of 10 because they're typically working with a broker or so-called advisor who is not actually a money manager. So again, we've had an overwhelming response not only to our fiduciary/registered investment advisor questionnaire, and we continue to get new clients each and every week, but we've had overwhelming response to the various articles we've posted in our website that help investors like you educate yourself on the difference. The big one that keeps coming up are these salesmen that sell variable annuities and fixed equity index annuities. Folks, if you've got a salesman who's trying to sell you an annuity, do not buy an annuity. Make sure you understand what you're really buying. Don't go with the song and dance. The person's telling you only what you want to hear, which is about a guarantee, which is about as worthless, as in my opinion, as they come. You need to understand what these things ultimately cost you and what you can make on these products. And at the end of the day, if you understood what you're really buying, you would run away from these products. Annuities are sold, they're not bought, and we continue to get dozens and dozens of questions every week on these products. And it's because that is the #1 commission product sold out there, is the annuity-based product. Brokers and insurance agents love to sell them because they don't work in your best interest and they're looking to line their pocket. So please be cautious before you buy one of these products. You'll be glad you did. Until Sunday's show, make sure you have yourself a profitable week. And as always, if you'd like to talk to our firm about managing your money as a fiduciary and as an actual money manager, working in your best interest, call our office. We would love to help you and build a portfolio in a manner that's conducive for you. Until Sunday's show, have yourself an extremely profitable week.